Good evening and welcome. The session will now start. I'm going to hand over to Mr. Richard Mutombo, CEO of SOMO. Thank you, Richard.
Thank you very much. A very good evening to all of you colleagues that have joined our SARS Texted webinar. We want to thank you so much for making time this evening, taking time out of your busy schedules to be able to join the South African Medical Association and get to be a part of this critical and important webinar that addresses a very important topic for individuals, companies, practices, like many of us that are connected, run on a day-to-day basis. The key question is, when you have a SARS debt, what are your options? What is your recourse? How can you get around ensuring that the money that you owe SARS ultimately is paid over to SARS, but you then also address it in a manner that does not then impact your day-to-day activities, and that also then keeps you compliant to all the tax legislation. So definitely SARS plays an important role to the fiscus of the country in the sense that monies collected or funds collected by SARS is funds that helps fund public service, infrastructure, and a number of social programs that benefit many. However, at times, as a taxpayer, you may find yourself owing SARS. And how you navigate and understand that process of paying over that debt becomes a critical issue that you must address. So tonight, our objective is to help you, one, shed light on the complexities that are associated with funds or money that is owed to SARS. Two, to then provide you with insights into the causes and consequences of actually owing SARS. And three, to then explore viable solutions that can help you manage and resolve that debt effectively. We have an expert speaker, someone who deals with SARS regularly, someone who helps others navigate and address this issue of SARS tax debt. And our speaker this evening is Mr. Ngulani, who is an accountant with 15 years of experience in the tax accounting field. And he has done and trained with the KPMG and CHF Chartered Accountants. And he also commenced his tax specialization career with PwC or PricewaterhouseCoopers. Mr. Ngobile is also a director now at MedArc, which is an accounting practice that specializes in tax and accounting for medical professionals like yourselves. He is a registered tax practitioner with SARS and also a member of the South African Institute of Tax Practitioners and the South African Institute of Business Accountants. So definitely our speaker today is well-versed, well-experienced, and is going to share useful insights that can help you address the issue of SARS tax debt. Mr. Ngulani, over to you.
Hi, good evening, everyone. Sorry, just give me 5 minutes. I seem to be having a power issue. I'm with you just now.
Great. No, thank you so much. Hopefully you can quickly resolve this technical issue concern that we have. Just give you a minute, then or two to do that. Good evening once again to all our guests and colleagues that have joined our webinar today. Apologies for the slight delayed start. Our speaker, Mr. Ngobeni, who is here, he is just having a power challenge. He had load shedding. He is just relocated to a new site where he is going to be giving us and delivering this webinar on SARS tax debt. I am informed he's almost there. Please bear with us for just another 2 or 3 more minutes, and our webinar will be starting shortly. Our sincere apologies for the delayed start that has been caused by load shedding at the very moment, but we are almost there. The webinar will be starting in the next couple of minutes. Thank you very much. Welcome back, Mobile, and apologies to all our guests again this evening for the technical glitch that was caused by an unforeseen occurrence. But our webinar will now start officially. Over to you, Mobile.
Okay, Richard, thank you very much. Apologies to the guests where the technical glitch related to the load shedding. The generator somehow failed to kick in, so apologies for that. As Richard has mentioned, my name is Ngobile Ngulani. I'm currently a director at Mediac, where I am a specialist accounting and tax practice for medical professionals. We have been around since 2012, and the reason why we actually went into the medical space is because we understand that most accountants were struggling with the medical practitioners, and most practitioners also needed an accounting firm that was able to understand their needs around the medical profession. So if we can get right onto it, I'll just share my screen here with the slides. Okay, so today we're going to be talking about SARS tax debt. So this is basically when you find yourself in a situation whereby you owe SARS money and you are unsure how to deal with that tax debt. So during the rest of the session, we'll be discussing the SARS collection methods and also discussing what options you have when you find yourself in a position when you've got SARS debt. Because SARS debt can arise due to a number of things. The most common one is cash flow. The honest truth is that with the economy biting hard, cash flow is quite a challenge for any practice or any practitioner. So in some instances where some amounts should have gone to SARS, one tends to then prioritize on other very key items at that particular point in time, like rent for the practice rooms, the consumables and the like, hoping that at some point the situation will turn around and they eventually get to settle their tax bill. Or at times, there could be errors that have come on the accounting side, and those then now lead to a tax debt. So it's very easy for one to find themselves in a tax debt and unable to service it. So the key thing is to then be able to know what options one has when it comes to that kind of debt. Okay, so basically today what we'll be discussing is the pay now argulator principle that SARS has. We'll discuss the various SARS debt collection methods. So this is what method SARS puts in place to collect their funds from you in the event that you have not paid. And then we'll discuss the 4 options that a practitioner has once they have a tax debt. Because remember, a tax debt is triggered the moment SARS issues an assessment. An assessment is basically a document detailing the amount that you've got to pay SARS for a particular tax type. And what triggers that assessment is a tax submission of any sort, whether it's a VAT submission, pay-as-you-earn submission, or income tax submission. So the moment there's an assessment, that gives rise to a debt. So the big question is, what do I do after getting this assessment? So the 4 options that we have, we'll discuss them in greater detail. The first, obviously, is paying the debt in one payment. The second option is what is called a SARS deferred payment installment plan. So this is where you approach SARS and request to pay in installments. We'll discuss that in great detail. Option number 3 is a SARS debt compromise or debt write-off. This is where you are requesting SARS to write off a portion of your debt. We'll also discuss that. And the last one is a suspension of payment of a debt. So where we are requesting SARS to hold any collection procedures pending whatever it is that we're trying to do as far as that debt is concerned. Okay, so the first thing we'll discuss is the pay now regulator principle. So as a general rule, SARS requires you to pay an assessment amount as soon as SARS has made that assessment. So should you then disagree with the assessment or deem the assessment not to be correct, what SARS basically is saying is pay us now, and then if you've got any arguments, argue later. This obviously is not good news for any practitioner, because it would mean that you're paying an amount that you don't exactly agree with. So this is where now we're going to explore what options one has in order to avoid that kind of a situation. But I must caution that when a tax debt is due, SARS actually has a mandate to bring forth to the High Court something called an ex parte application. So which is where SARS is actually able to go on and have your assets attached even without notice to you, and various other mechanisms that they put in place. So which is why this pay now aggregator principle gives SARS so much of the powers. All right. So on the SARS pay now aggregator principle, SARS becomes very strict on a taxpayer when there's certain prior instances that a taxpayer has, which makes them a high-risk taxpayer. For example, when one has been convicted of a tax offense, this is where one has knowingly submitted a fraudulent tax return, when one has frequently failed to pay the amounts due to SARS, or when one has frequently not been able to satisfy any obligations under any of the tax acts. So which is why it's very important for you as a practitioner to ensure that you are compliant at all times. So compliance is not just a once-off activity. Compliance is an ongoing activity, all right? So it means you need to ensure that you are compliant all the time by way of submitting tax returns and also by way of ensuring that all amounts to SARS have been paid. So if you have an accountant, which is the instance with most practitioners, that's actually performing this compliance function on your behalf, we need to ensure that that is actually always the case. And how that is done is every month you should be receiving communication of some sort from your accountant. So typically they'll say to you, we've submitted this pay-as-you-earn return, since pay-as-you-earn is every month, and you've got to pay X amount. Or every 6 months, they should let you know what the income tax payable is, or every 2 months, they need to let you know what the VAT is. So many a times we find with practitioners, they will go for periods of time without communicating with their accountants and just leave everything in the hands of the accountant. Our view is that you actually need to have a follow-up of some sort. I always say in the various platforms where I speak, to say that if you spend a period of more than 30 days without hearing anything from your accountant, whether he's asking you to pay something, is requesting for information, or is just informing you that he submitted a particular return, then you know problems are about to start. Because especially if you have employees, that's a monthly function, especially if you have your VAT, that's every 2 months. So at some point within the 30-day period, you've got to interact with your accountant, whether by email or of some sort. So that's one of the first things that should be a red flag to you as a practitioner in terms of your compliance. So we will now discuss the debt management cycle. The debt management cycle is SARS cycle when it comes to the collection of debts from anybody. So I think the important thing I would like to highlight here is that SARS is actually not as bad as we think they are. They're actually not as bad as we think they are, because when you've got a tax debt, they'll give you so many options and be patient with you until they get to that point in time where they're now aggressive and where they're now attaching your assets. SARS will not just wake up one day and attach your assets before they actually give you a chance. So this debt management cycle, I'll be explaining step by step the steps that SARS takes before they get to the point where now they deem it that all their steps have been unsuccessful and they can now approach the High Court to have your assets attached. So there's the prevent phase, there's the assist phase, there's the enforcement phase, and there's the recover phase. So we'll touch briefly on each one of these ones. So in the prevent phase, basically, SARS is just sending you a courtesy SMS before the debt becomes overdue. So in this instance, you'd have gotten an assessment to say you owe X amount of money, which is due on this date. So even before we get to the due date, SARS just sends a courtesy SMS or email to say, hey, by the way, you owe this kind of money that is due on the 31st of September, on the 30th of September, for example. please ensure that you pay before the due date to avoid any penalties. You find most of the times people will ignore these messages because they maybe deem them as spam. But the other very important reason which I want to touch on is that people simply at times do not get these messages. And the reason why you don't get these messages is because you not have updated your contact details with SARS. So it's actually very important to actually update your contact details at any single point that you get. So for example, you've moved offices, or you have moved your home, you've changed your cell phone number, you've changed your email address, you need to inform SARS of this all the time, okay? Because in that way, when SARS sends us communication, you'll be able to get this communication and it will not skip you. The same applies when you have changed accountants. Most of the time you find your tax profile is sitting with an accountant. So when you change accountants, there's not, SARS doesn't know that you've had a change of accountant. It's up to the current accountant and yourself as well to ensure that SARS is informed of this change in accountants. So you find most of the time, SARS will still be sending out communication to the old accountant's tax profile, to the old accountant's email address. So in that instance, you then miss out on communication. And most of the times, in fact, let me not say most of the time, some of the time, the relationship with the previous accountant may not be as great, and they will just simply not forward that communication to you. I mean, at times it's an act of being spiteful, or at times it's just because the relationship is soured. They just think, you know what, I'm just not going to bother with this. But then SARS has discharged this obligation in terms of informing you. So which is why it's important to ensure all our contact details are actually up to date as far as SARS is concerned. So that's basically the prevent phase. This is before the debt becomes due. It's just a reminder. All right. And then the next phase in the debt management cycle is the assist phase. In the assist phase, the debt will now be overdue, and SARS is just saying, hey, by the way, you are owing us money. So in this instance, you'll find that your status on your SARS tax clearance reflects as non-compliant. So I'm not sure if you're aware, SARS changed its tax clearance system a couple of years ago and changed it to an ongoing compliance process. Previously, you'd have a tax clearance certificate which was valid for 12 months. So the effect that had was practitioners would only attend to their tax affairs once a month, sorry, once a year. So you attend to your tax affairs, become compliant, you get your tax clearance certificate, and then you just think, you know what, I'm going to deal with this next year again. However, with the new tax system, for the tax compliance system, it's a live system that seeks to ensure that taxpayers are compliant at every time during the year. So you find that, for example, you were tax compliant yesterday, all right? And today is the 7th. The 7th is the deadline for the submission of pay-as-you-earn returns. Tomorrow morning, on the 8th, your tax status will be non-compliant because of that one outstanding return. So you can see now the importance of ensuring that you are compliant all the time. And it goes back to what I said in the beginning to say that you need to ensure that every 30 days you are having a communication of some sort with your accountant in order for you to remain compliant. Step number 3 in the debt management cycle is called the enforcement phase. So this is where SARS now has sent you all the reminders, and you still haven't made good on your tax debt, and you still haven't approached them in terms of what plans you have for that debt. So at the enforcement phase, SARS then starts a legal process in order to take judgment against you. Because remember, SARS is also a creditor. In the same way your West Bank and your credit card and whatever it is, I mean, when you owe them, yeah, you are also a creditor. So they are also allowed to follow this same legal process to actually seek judgment get assets attached, list you on the credit bureau and the like. So, and we all know that a listing on any credit bureau is actually a very big disadvantage when you get to a point where now you need to apply for any facility with any financial institution. Another enforcement action that SARS can take is attaching and selling your assets. This is very common. We see it on a daily basis because we follow a lot of these court cases. So I think many people think, no, this will never happen to me. This only happens to the politicians and the so-called prominent business people. But believe you me, it happens every single day to a lot of practitioners. It's just that it's probably not as widely publicized in the media and the like, but it does happen and can happen to anyone as long as they have not fulfilled their tax obligations. So this is where now the concept of something like a trust comes through. So you find some practitioners then have all their assets registered under trust to protect them against such actions, because essentially one of the key benefits of registering a trust is to protect your assets from creditors, and SARS would be a creditor as well. But yeah, the trusts are a discussion for another day. All right, then the last phase in the debt management cycle is called the recover phase. So this is where now there's a letter of demand that has been issued, and if there's still no action from you, SARS proceeds with what is called a third-party appointment. So basically, a third-party appointment is when SARS requests a third party to collect funds from you and pay over to SARS. The most common of those third parties is your bank. Remember, the bank is holding funds on your behalf, and SARS can write an instruction to the bank to instruct them to pay over any funds that are in your account to them. This has been one of the most effective SARS collection strategies, because with this one, there's no notice. So literally, you could wake up. So I'll give a typical example. With the medical aids paying every 2 weeks, you get funds in your account. Let's call it 200,000 Rand has gone into the account. And the bank has issued, and SARS has issued to the bank an instruction to hold all funds and pay over. That full 200 would actually be paid over to SARS, and you log into your internet banking one morning and you get an error message that says funds withheld by SARS. So the unfortunate part about that is that SARS could actually withholding funds that you required urgently for your operations in terms of paying your fixed expenses, your salaries and the like. And like I mentioned, the receiver does not give you any notice for this. It's just the bank which is notified, because they've given notice to taxpayers to say, we'll be deducting X amount from your bank account for this debt that you owe. But however, what taxpayers have been doing is to then move funds to a separate account. So now they don't inform you. They just inform the bank pays the funds over. And believe you me, once you get to that step, you will act. You will go and engage SARS, which is what they want anyway. So you find that once they've done that, you have to then go and make some arrangement with them, and only then will they unblock the account. But the point is, the funds that have been paid over are not being returned to you. So I urge everyone, when you're in a debt situation with SARS, please don't sit on it. Please don't ignore it. Rather approach SARS, because once you get to a point where funds have been deducted from the bank account, you hardly have any negotiating power. All right, so that's the last step there. All right, so the next slide still discusses that collection of debt from third parties. This is not just limited to the banks, it's also limited as well to any debtors that may owe you. So SARS is allowed as well to approach medical aids and actually request you to the medical aids to pay those funds over. And I must mention again that in some instances, the bank can motivate on your behalf to leave some funds for basic living expenses. This is especially the instance where SARS has taken amounts from an individual's account. So for those practitioners operating as a sole proprietor, the bank may motivate to say, look, please leave 5,000 Rand or whatever for their food and the like, but that's purely the bank's discretion. In practice, I've seen they never do it. They actually just take all that money and pay it over to SARS. So let's not find ourselves in that position. All right, so then now, what you do after getting an assessment. So like I mentioned, an assessment is a document from SARS after submission of a tax return that details what amounts are due to SARS and on which dates. So once you get this assessment, the big question is, what do I do? So there's 4 options. The first option is for you to make an immediate payment to SARS, assuming cash flow allows. The second option is a suspension of payment. We'll discuss that. The third option is an installment plan with SARS. And the last option is a compromise or tax write-off. So we'll touch on those right now. So as previously mentioned, your right to object to an assessment is fundamentally separated from SARS duty to collect. So this just means that even if you dispute, the SARS collection process is still going forward and forging ahead. So the first option, like I mentioned, that you have is immediate payment of your tax debts. This is where now, if you've got the funds, you immediately pay this money over to SARS. What that does is that you avoid late payment penalties, which are usually 10% of the amount owing to SARS. You avoid interest, SARS interest. And remember, this interest is not tax deductible. So when you do your tax return and you mention your tax deductible expenses, you will not be allowed to list this interest on there. So it's always in our best interest, if cash flows allow, to pay this tax debt. And I must mention that a tip that I can give, which we've used when working with a lot of practitioners on this issue of paying for tax debts, is budget for your tax debts on a month-to-month basis, especially income tax. That's actually one of your biggest tax obligations that you have as a lump sum amount. So instead of doing your financial statements once a year and having this huge tax debt, why not get your accountant to prepare monthly management accounts? So what these monthly management accounts do is, you will know that from on a monthly basis, X is my profit, and say 10,000 Rand is my tax liability for this month. Put that 10,000 Rand away in a separate account. The following month, perform the monthly profit calculation. My tax for this month is 5,000, put it away. What that does is that come 6 months later, when you have to file for your taxes, you will not have a cash flow issue in terms of dipping into your current transactional account. All you simply do is to just go to that investment account where you've been saving for those taxes on a month-to-month basis, and you draw from there. That way, you're not upsetting your current cash flows. The same will apply with your VAT. Your VAT is due every 2 months. Why not every month have the accountant calculate for you what the obligation is and put it in the same account? Because with some of these taxes, it's just a question of proper planning in order for us to be able to pay our obligations. Right, so option number 2, when you have a SARS tax debt, is to go into what we call a deferred payment installment plan. So this is where SARS has been approached to say, we acknowledge that we owe you money. However, due to cash flow constraints, we are not able to pay you this money in one lump sum payment. So in this instance, you will then get into an arrangement with SARS. So I must point out that it's purely at SARS' discretion to accept this arrangement or not accept it. Okay, so the installment plan, they range from 6 months, 12 months, 18 months, 24 months. So usually with the 6-month plans, the document requirements are not as much. It's actually a much quicker application, but for any arrangement over 6 months, there's supporting documentation that will have to be submitted. But definitely this can be done. If you owe SARS money and you are unable to pay in that one payment, then definitely the way to go is this deferred payment plan, which is the most common really, because other than keeping quiet and sitting on this debt and hoping it's going to miraculously go away at some point in time, why not approach SARS? You know, you can get your accountant to approach SARS and get this installment payment plan. So I'll just run down through the basic requirements for SARS to approve the deferred installment plan. The first thing is all your returns have to be up to date. This goes back to my what I've been repeating to say that compliance is a monthly function. Please ensure every month your accountant submits the returns and ensure that every month the payments are made to SARS. So one of the requirements is that all the returns have to be up to date. You need to complete what's called the CIS 001 form. It's basically a form where SARS is getting your basic information in order to capture onto the system for purposes of approving this installment plan. You need to write a letter to request for the deferred arrangement and state the reasons why you want this arrangement. The common one is cash flow. That's the most common, to say, you know, I've had cash flow constraints. Business hasn't been doing well, so then I would like to have this payment plan. You need to have your latest annual financial statements and latest management accounts. So the management accounts are the monthly accounts that I've referred to, so those will also be needed. You need a cash flow forecast. This will basically detail what funds you expect to get and what your expenses are going to be. Normally, they need a forecast for 12 months. They'll need 6 months bank statements from your bank. They'll need a list of your debtors and your creditors. Your debtors, the people that owe you money. The most common in our instance is going to be the medical aids, and creditors, whoever that we owe money to. So it's basically all our practice service providers. Last thing that they'll need is an asset register. This basically details what assets you have. So if you are trading as a sole proprietor, this will be all the assets that you have in your personal capacity. If you are trading as an Inc., this will be all the assets that are owned by the Inc. So these are all the documents that will be required by the receiver before they can consider the deferred installment plan. And then we then have the third option when you have a tax debt is a debt compromise or debt write-off. So this is in terms of Section 200 of the Tax Administration Act, where SARS is able to write off a portion of your tax debt. All this is legal, like I mentioned, Section 200 of the Act. SARS actually does extend instances whereby they'll write off a portion of your debt. And how that comes about is that you have to provide the reasons for that write-off. So you might find you incurred that tax debt when business was still good. You know, you're owing SARS R500,000, because at some point in time, you're making millions in revenue. And during that time, you failed to pay those amounts to SARS, and now business is not as good, and there's no way you'll be able to afford that 500,000. So your current circumstances do not allow you to make that payment, which is when now you approach SARS for a debt compromise to say, guys, listen, I acknowledge I owe you money. All my tax returns are up to date, but I'm not able to pay this money. Please, can you give me a write-off for me to start on a clean slate? And going forward, I promise to be well behaved as far as my tax issues are concerned. SARS will then look at the case and the merits around it, and then they will then proceed with the debt compromise or write-off. We've assisted hundreds of clients with these kind of compromise write-offs, and there's no a cast in stone amount of the write-off. So we've seen write-offs of 40%, 50%. At one instance, we've seen a write-off of 90%, where a client only had to pay 10% of that tax debt. So it's really on a case-by-case basis where it says, but the main thing really is that you have to prove that business conditions have dropped, and you have to prove that you are unable to actually service that debt. And one of the key things is that they'll also look at the assets that you have. So for example, you cannot be driving a Ferrari and having 100,000 debt with SARS and ask SARS to write it off. I mean, they'll just say no, because the whole point is why don't we sell that Ferrari that you love so much and we settle the SARS debt? So even if it's a compromise, it has to be in SARS best interest to actually do that, you know, to say, look, but yeah, it's a reasonable case. This will actually work for us and for the taxpayer as well. All right, so just quickly, the reasons for the decline of a debt compromise. If you've had a compromise in the last 3 years, SARS will not allow that. If your tax affairs are not up to date, if there's a creditor that's brought you forward for liquidation, if this compromise will disadvantage other creditors, they will not allow that. And if the compromise will affect broader taxpayer compliance, which is the Ferrari example that I gave, they will not allow the debt compromise. Last option when you have a tax debt is called the suspension of payment of debt. This is where you're saying to SARS, I owe you money. However, I don't agree with this assessment. Please, can you hold any collection procedures while I work on my dispute? So it's a suspension of payment. Because remember, even if you have a dispute on the assessment, for as long as you haven't lodged a formal dispute or the dispute process hasn't been completed, so it could have been initiated, but as long as it has not been completed, then you are still liable for that debt, and SARS will still continue with any collection procedures. So with the suspension of debt payment, you are saying to SARS, please hold collection procedures, please hold any legal proceedings while we are continuing with our objection. So on this one, there's a number of issues that they look at before they actually can grant you the suspension. The first one is the compliance history of the taxpayer. So this is where we're saying, if you've got a history of non-compliance, chances are this will be rejected. Risk of dissipation of assets. This is where SARS sees a risk that you could sell your assets pending the suspension. They also look at if you can provide adequate security. In some instances where they don't actually trust your submission, they'll say to you, can we have security, which could be title deeds or any other security. And the last one is there any fraud involved? So where the dispute relates to you having submitted a fraudulent tax return, then SARS is allowed to actually say no to that suspension of payment. So I've put up here on the slides some additional information on the SARS website where to go to if you found you've got a tax debt. But I think basically what we've touched on are the main things that should be taken into account when you've got a tax debt. So you can either pay it in full, you can request a deferred payment arrangement, you can request a write-off where you genuinely can't afford to pay this. It's normally a partial write-off. It's in very few instances where it's a total write-off, but they'll write off a very good chunk of it, definitely, because in practice, I have not seen anything less than a 40%. I think the worst was like 40%, but normally it's 40% going up that they'll write off. And the last option, like I mentioned, is a suspension of debt pending any objections, because the key thing is we need to ensure that you don't get to a point where SARS is now dipping into your bank account. So in case you have any further information, any further issues, or there's anything that you haven't understood, there's our contact details there on the screen. I will also be sending these slides to Sama, so you can also access the actual slides for your own reading pleasure. And here's as well the contact details for SARS in case you've got any issues or your accountant is not able to read SARS. So ladies and gentlemen, thank you for your time. This marks the end of our presentation. And apologies once again for that technical glitch at the start of the presentation. I hope it's been beneficial, and I hope we don't have instances of anyone who has attended this presentation having any issues with SARS. Thank you and have a good rest of the evening. I'll hand over to Richard for any closing remarks and any questions. Thank you.
Thank you very much, Robile, for a well-presented webinar that has highlighted a number of key aspects that colleagues should consider, that practitioners should consider when they have a SARS debt. As we have seen, having a SARS debt, yes, we should try where we can to avoid it. But if we've had the SARS debt, it's not the end of the world. There is more that we can do to fix and address the debt that we owe SARS. So it's in our interest, as we have seen in this webinar, to do as much as we can to try and address the SARS debt. Now, we come to our question and answer session, and we invite you all to post your questions that you may have, and we will then attempt to answer most of the questions that you'll have. And I see already we have two questions. One, the first question that we have there is, knowing that a good number of healthcare professionals struggled during COVID-19 period, did you see any tax debt write-offs during or after that period? So that's a very good question that's asking on the differences before COVID and after COVID, given the challenges that COVID came along with. The second question again that we have is, can you get debt compromise more than once. So this is an instance where perhaps you've been granted a debt compromise, and again, you've found yourself in a similar challenge or case. The question then is, can you get the compromise more than once? So over to you again, Xobile, just to answer for now those two specific questions.
Okay, so the first one that I'll tend to is the debt write-offs due to COVID. So we're all aware, obviously, that it was not business as usual, rather it was business unusual, but during the COVID era, which saw a lot of practitioners fall back in terms of payments of not only their SARS obligations, but as well obligations to other creditors. So actually, we saw the biggest number of write-offs by SARS post-COVID. So this is when we actually attended to a lot of requests for compromise and a lot of requests for the write-offs. And this was probably the biggest submissions that we've done post-COVID, because you find a lot of people who are unable to satisfy their income tax, VAT PAYE, and the like. So yes, I did mention as well during the presentation that the highest write-off that I have seen on a practice which is still a practice until today was a write-off of 90%. So yes, post-COVID, they were there, and some of them are still ongoing till today. Because remember, the debt compromise, it does take quite a while. So let me also mention that part, that it's not something that's going to be concluded within a week. It actually takes a couple of months to actually conclude a compromise, because from the point that we have compiled the documentation and the point that we submit to SARS, SARS still needs to verify information further. So a typical example that I'll give is where there was one client that did not disclose properties that they owned, and didn't disclose some vehicles that they owned as well. So when SARS had received all the information for the compromise and they did their checks, they found that the taxpayer actually had assets that they had not disclosed. And this was after some time, because the deed search as well will take a bit of time to actually be able to source out. So that's what takes time in terms of the compromises, the verifications, and all of that. So yes, just to answer the question, the COVID post write-offs, are definitely there, and that's where we've seen the highest in terms of the number of submissions and in terms of the amounts of the write-offs. And then now on to the second question, where you'd like to find out if one is able to be granted a compromise more than once. Yes, you can be granted a compromise more than once, but however, it cannot be within a period of 3 years. So say, for example, you've been granted a compromise now in 2023, so which means all the way up to 2026, you'll not be able to successfully apply for a compromise with SARS. So you'd only be considered from the year 2027 going forward.
Great. Thank you so much, Xobile, for answering those two questions. And we certainly have more interesting questions and very good questions that are being asked by our guest tonight on this very important topic of SARS debt. So the next questions, round of questions that we have, I see we have 3, and we will try and take these in one go as well. So the first question, which is a very, very good question again, is VAT versus personal income tax. Which of these is more lenient? It's a very good question. And I think perhaps the question, if I am to probably paraphrase it, is probably looking at saying it's the two of these, which ones would be more beneficial to the running of a practice? Which one is more beneficial to the running of a practice, VAT and versus personal income tax? And certainly looking forward to your answer there, noting that these are obviously two different types of tax as well. And then the next question that we have here it says here, what is the incidence of health practitioners being investigated for VAT? It's a very good question there. So what is the incidence, and perhaps maybe the occurrences maybe of health practitioners being investigated for VAT? Those are two very good questions, and perhaps Mabile, let's take those two for now. We'll go on to the next round later.
Okay, great. Okay, so the first question on the VAT versus the personal income tax. As a general rule, every tax is important as far as SARS is concerned, because those taxes, both of them, the VAT and the personal income tax, both contribute to the fiscus, and SARS would place great importance on both of them. However, if we look at the two taxes, just to touch briefly on them, VAT is a tax which is levied on goods and services, and personal income tax is a tax which is levied on your income as a practitioner. So you've seen your patients, you've paid expenses, and the tax that is charged on that profit, that is what is regarded as the personal income tax. So SARS takes a harder stance on VAT because their approach is that it was never your money to start off with. So you must understand that with VAT, you have collected funds on behalf of the receiver. Because when you charge a service, say it's 1,000 rands, and that service eventually goes up to 1.150, the 150 portion, which is the 15% VAT, is actually not your money. It's SARS money. You are just acting as a collection agent for SARS. So which is why you find SARS is much stricter on VAT, and SARS will look at any debt write-off or compromise in a more stringent way on your VAT, because the whole point is this was never your money. So we asked you to collect funds on our behalf, and you have failed to declare these funds to us, or rather you've used these funds for your personal purposes. So which is why you find now with the VAT, they are a whole lot more stricter. So on the personal income tax, the notion is that this was your money, and the tax law is that we actually have to get a portion of your money. We agree it's your money, but we still want it. You know, the rules say we should just take that percentage for the fiscus. So that's why you find a bit more lenient when it comes to personal income tax, because they do acknowledge the fact that this was actually your money to begin with, unlike the VAT, which was never your money. You were just a collection agent on behalf. So I hope I've answered that question appropriately. Then the second question, in terms of the incidence of VAT investigations or VAT audits. So the main thing is that VAT is actually SARS' biggest tax revenue stream. So most of the money that SARS will have, it comes from VAT. Because if you think of it, SARS is there, VAT is there pretty much on every product that you purchase, and pretty much there on every service that you purchase. So it follows naturally that that's their biggest revenue contributor. So the reason why there'll be VAT investigations, there's quite a number of reasons. And the first reason is because there's normally a disconnect between the VAT submissions and the income tax submissions. So say, for example, you have your accountant submitting VAT returns every 2 months, and maybe due to cash flow constraints, or they're just being naughty, or even at your instance, you've said, no, hi, can you reduce this, please? This is too high, or whatever reason. And the accountant ends up under declaring the VAT. What then happens now is that when the income tax return is submitted, SARS has an automatic reconciliation process where they add up your revenue submissions on the VAT and compare them with the revenue that you have declared in your income tax return. The moment there's a disconnect there, that's an automatic VAT audit. The other instance of a VAT audit is when there's no consistency. Because in as much as I agree that you'll not always get the same amount of revenue or have the same expense nature month on month, however, there should be a trend of some sort, you know. So if our practice is making a profit, in sales, of say 400,000 on average every month, 400, 350, 450, 420 thereabout, and equally, you know, on the expenses is 100,000, 90, 120, and like that trend should continue. The moment there's a sharp increase or decrease, that will trigger a VAT investigation. In practice, what I can tell you is if there's an increase, SARS will never come to you for an investigation. I haven't seen that because basically an increase in the revenue means it's more money to them. So, I mean, why would they complain? There's more money coming through. The opposite is where our problem starts, where now you've suddenly got a sharp decline from 400 for 12 months or 24 months. All of a sudden, you're now declaring 100,000. Then that's an automatic VAT investigation, and you then need to then respond to the investigator or the auditor with sufficient, appropriate documentation to show that you've got a genuine dip of revenue in revenue. So basically, this will be your medical aid reports or from your bureaus, and this will also be your bank statements. Another instance where practitioners will get VAT audits or investigations is on the input tax, because remember, with the VAT, you've got your output tax, which is the amounts that you collect from your patients. Then you've got your input tax, which is what you are paying to your suppliers. Typically, a medical practitioner sells time. Most of the instances, you sell time, not goods like what your Pick n Pay would have. So almost all the time, you should actually be in a position where you've got a VAT payable to SARS. So meaning your expenses in 99% of the time will be less than what your revenue is. So if you then get to an instance where you've got a high input tax claim, which is a high expense claim, that also triggers an automatic audit. So yeah, those are basically just the common instances where a practitioner would be audited.
No, great. Thank you so much, Mobile, again, for answering those very good questions that were raised by our guests. And I think the key point to note, again, is highlighted, is that with VAT, it becomes compulsory for you to register the moment you are running a practice and that then gets, or one is running a business that then exceeds 1 million in a period of 12 months. One has to then register for that. And then we then have the next questions that have been posted by our guests. The next one, which is again a very good question. SARS has audited me every year and found that everything is correct with my tax submissions. I changed my bank account this year and had to send them proof. Now they have rolled back my audited submissions for the past 5 years and say I owe them money. My tax practitioner has been engaging with them saying we are correct. Not sure what to do. Just SARS wanting more money, or should I question my tax practitioners? That's a very interesting question. That's essentially saying SARS then has relooked at what they had previously audited, and they are now questioning some of the numbers before. And the key question then is it the tax practitioner or is it SARS? I think that would be a very interesting question there. And then another one again that we can take on this round: what happens when you are unable to pay full amount for VAT every 2 months due to cash flow? What happens to the remaining debt? A very good question again that we'll ask you again just to highlight on. You had touched a bit on that when you went through the slides, and just we ask you to briefly and quickly touch on that. And then the third question that we can also take on this round, it says, yeah, when it comes to the medical practice and SARS tax implications, what would you advise between operating either as a sole proprietor or as an incorporated entity? Very good question there. Which one is better between those two? And the last one maybe that we can take for this round: what's the difference between income tax and provisional tax? Very good question. So we have income tax and provisional tax. What is the difference there? So let's take those questions for now, and then we'll take the next round again in a minute.
Okay, so firstly, on the practitioner that has been getting audited every 5 years, every year for the last 5 years, that is not uncommon. It's always purely at SARS discretion to to actually audit taxpayers. So at times it's just a random audit. Everything of yours could be up to date, and you could just be, I'll call it unlucky to actually go through a random audit all the time. The other reason why that could be there was that consistently there's information which does not tie with SARS records. Because remember, SARS has a lot of our information by the time we submit the tax returns. SARS got access to the bank accounts, so they're able to have a rough view of what your revenue is. SARS have got access to any interest that you've earned. When the bank sends you those IT3B forms to show your interest, they've got that information. SARS has got access to the medical aid records as well. So you find when you submit your tax return, a lot of that information is actually pre-populated. So you might find if you've made a submission, and if it doesn't agree with what SARS has pre-populated on their records, then that's an automatic audit. So without knowing the full merits of the case, I'm unable to give a view on whether the issue is with the tax practitioner or with SARS themselves. Because I must agree with the practitioner that an audit every 5 years sounds a bit much. That doesn't sound to me like a random tax audit. That sounds to me like a structured audit where every year there's something being submitted which may not agree with what SARS has. So at times it could be genuine errors or for whatever reason. I would actually advise the practitioner to have SARS have a sit down with their tax practitioner to explain exactly what it is that's being audited. Because SARS, there's normally one thing that will trigger the audit. So I would say rather have an engagement and get from SARS exactly what has triggered the audit, and that will greatly assist. And then the next one, the practitioner has asked what to do when they're unable to pay the VAT every 2 months. Unfortunately, VAT is one of those evils that has to be paid. So to say evil, but it's a necessary evil, because it becomes unfair on tax practitioners, because most of the times you are just collecting funds and you hardly have any expenses to set off against that VAT. So a couple of years ago, when I was with one of the big 4 audit firms, we actually made a submission to SARS to request an exemption on the VAT for medical professionals. SARS declined that request because they say that would then open up a whole can of other professionals, and even the pharmaceutical industry as well, now requesting for the same exemption on the VAT. So I agree, the VAT does get very heavy on medical professionals. So to the practitioner that's unable to pay every 2 months, I would say they need to then look at a saving strategy. Like I mentioned, the VAT is submitted every 2 months. But however, if you manage to balance your books on a monthly basis, you can actually save for that tax on a monthly basis. So for example, I think paying 50,000 Rand in one go after 2 months is actually worse off than saving 25,000 Rand each month for those 2 months. So I think really this all goes back to the monthly tax planning, where you are even saving these amounts aside. And practically what I'd actually advise the practitioner to do is, when you get your income from medical aids every 2 months, you must know, every 2 weeks, sorry, you must know that 15% of that amount is actually not yours. So before you even get to a point where you incorporate it into your spending pattern, every 2 weeks when you get your funds, move the 15% out into a separate investment account. You'll find that after 2 months, when the VAT has been required, is now required, you will then be able to service that VAT. But there's no exemption that they can give you, unfortunately. If the money comes in, 15% of that has to be paid through. Third question, is it better to operate as a sole proprietor or as an Inc? In my view, an Inc is a better way to operate a practice. And my reasons for that, and remember, you will find that people have different views, but my reasons for the Inc submission is because, number one, an Inc has a fixed tax rate of 27%, regardless of how much you're earning. And as a sole proprietor, you're being taxed as an individual on a progressive scale that can reach as far as 45%. Also, an Inc. is a company, is a business, it's a more structured way of running a business, which also ensures a certain level of continuity. So definitely from a taxation point of view, from a structure and continuity point of view, I would advise an Inc. because there's a clear demarcation between the business and the person. All right, and then the fourth question, the difference between income tax and provisional tax. Income tax is a tax that you pay on your profits at the end of the year. Provisional tax is an upfront payment towards that tax. So say, for example, now we are in the 2024 financial year, because financial year started now the 1st of March 23 and will end 28 Feb 24, which is why it's 24 financial year. You only know what profit you've made after February next year, the profit for the year. However, SARS requires you to make an upfront payment twice. Firstly, in August, so provisional tax was being submitted last week, Thursday, and a final payment again in February. This is all just to help you as a tax practitioner to plan and manage your cash flows better. So instead of after Feb next year, having to pay income tax for the full year's trade, you will just pay the provisional tax in August now, which is your estimate for the 6 months, and then another 6-month payment. So basically, income tax is the final tax for the year. Provisional tax is a tax which is paid or is a prepayment of the tax towards this final income tax. Yeah, that's the questions I have for now, Richard.
Thank you so much for taking those and for helping us with those questions. One other question that we answered online was asking why the practitioner or medical practitioner would be held liable for errors perhaps that could have been caused by the accounting or the tax practitioner. And definitely the long and short of it is ultimately SARS looks at the individual taxpayer, and it is your responsibility to make sure that your tax affairs are in order. And that is why you would be held liable. But you feel free to add any additional points that you may have on your side then, Pabile. And then we have another question here. We have 3 more that have come in. One says medical aid payments are said to be VAT inclusive. So does that mean we already owe SARS for medical practitioners in private? Are there avenues of VAT relief available for health practitioners? So a very good question here in terms of VAT and the possibility of there being any VAT relief that is available. Thank you so much for that wonderful question. And then another question again, which is a very good question linked to the first question. Is there a way to arrange with medical aids to pay income tax and VAT directly to SARS? Very good question, that one. So, can arrangement then be made for medical aids to withhold whatever the VAT that is due to the practitioner, and they pay directly, and the practitioner gets the net amount of VAT, and they don't worry about taxes? So a very good question there that's being raised. And lastly, the question for this round and the last one that we have so far, it says, as a solo practice or practitioner, what are my boundaries with regard to VAT number? So e.g., or for example, can I buy non-medically related property, e.g. a farm, and claim back from SARS? Very good question here. So I'm running my practice, but now, I could be into farming, or farming could also be another area that I'm interested in. Can I then buy a farm, or can I buy equipment or whatever other things that I use at a farm and claim through the practice? A very good question. So over to you, Babile, on those three questions.
Okay. All right. So just to add on, Richard, on that first one, to say why am I as a practitioner being held liable by SARS for my tax debts? When you appoint your accountant, you are giving them what's called a power of attorney. That is actually registered with SARS. It's not, you don't have to sign a document. The fact that you have actually given them your login details, or the fact that they've added your tax profile onto their practitioner profile, automatically a power of attorney is deemed to have been granted. So with that, you are saying that you are responsible for all the actions of that tax practitioner, which is why SARS will still hold you liable. And then the next question on the VAT on medical aid payments. So once you are registered for VAT, all payments that you receive are deemed to have VAT included. So in most instances, for a trading company, you'll see on an invoice that they send out, if the good or service is, say, 1,000 Rand, they'll indicate there that there's a 15% portion, which is VAT. In this instance, the amounts that you receive are deemed to be VAT inclusive. So the VAT Act does make it very clear that unless expressly stated, all amounts that are received by the practitioner are deemed to be VAT inclusive. So you apply what we call the tax fraction to that amount. Say you've got 1,000 Rand. So the equation is 15/115 times that 1,000 Rand. That's the VAT portion. So as long as you've got a VAT registration, when you get monies from the medical aids, just know all of that money is not yours. A part of it relates to VAT. The third question around medical aids paying directly for income tax and VAT, the short answer is no. That is not possible, because can you imagine the administrative nightmare that these medical aids would actually have to go through? So it's the same with any other customer or client or patient that you have, or any other service provider that pays you money. You need to receive that money and sort out your own tax affairs purely from an admin point of view. So they will not take on the admin of actually paying the monies over to SARS directly. This is where now you need the discipline, number one. Number two, you need the accountant to enforce these things, to say when the money is received, let's save for this money before it gives us problems. And then the fourth question on the sole proprietor, on the VAT number. So if you are operating as a sole proprietor, the VAT number is issued in your name, in your personal capacity, as opposed to operating as an Inc. So basically, you'd be able to purchase anything and claim from SARS, but not say anything, only the stuff that is related to the practice. So the VAT Act clearly states that any claims should be in the course and furtherance of an enterprise. I'll repeat that. Any VAT claim should be in the course or furtherance of an enterprise. Loosely translated, all that just means that whatever it is that you're buying should be for the benefit of the practice. So if you are going to go into a different business, then you need to then go and inform SARS of the change of the business nature. For example, if I go back to the farming example, farming has got a different VAT structure altogether. So that VAT number that you have will not work in terms of farming, because with the farms, VAT is paid every 12 months, and in some instances every 6 months. So you won't be able to use that VAT number for a farming enterprise. So if you say to SARS that a medical practitioner, they'll only be able to give your claim back on invoices related to expenses for the practice and nothing else. So you could then opt to then and go and add on to say, I'm a practitioner, plus now I'm in the business of repairing of furniture. Then yes, you'll be able to claim on the practice stuff and furniture stuff, because it's been included and added as a business function.
Thank you so much, Tlabile, for answering those specific questions. And I think we now have just one more, which we'll probably take as our last question for this particular webinar. We really want to thank all our guests for all the wonderful questions that you've raised up until now. And this last question then says, does SARS require both payment taxes as an incorporated company and personal as well, or either? So payment of taxes either as an Inc. And personal, either or one of those two. Over to you on that one.
Okay, so on that one, SARS requires payments for both actually, because you and the Inc. are two separate persons. The Inc. has a registration number, you've got an ID number. The Inc. has its own tax number, and you also have your own tax number. So the trading entity will be the Inc. that receives the income and has a profit. However, as a practitioner, you are also supposed to be an employee of that Inc., or rather draw funds from that Inc. So most of the times the practitioner will get onto the payroll of the Inc. So they will then be paying their pay-as-you-earn tax on there, and the Inc. pays income tax on its profits. Or if the practitioner opts to rather get their drawings by way of dividends, they'll be paying their dividends, 20% dividends on the funds that they've received. So the short answer is yes, you'll be required to pay on both ends. However, this is where you need to contact your tax practitioner to put up a structure for you, which will be able to save you on tax. So it's not like you're paying the tax twice. No, you're not. But it's just paying the tax in two different spheres. So which is the corporate side and the personal side. So which is where now a clever practitioner has to then structure it in such a way that your overall tax bill, looking at those two taxes, becomes as minimal as possible or within the confines of the tax laws.
Thank you so much, Wabile, for helping us today with the webinar and for taking all the questions that our guests had this evening. We want to thank you for the time that you've taken to prepare and to also speak to us on this critical issue of SARS debt. And I think the key takeaway message that has come through this webinar is we must be compliant with SARS, and we must do our best to keep ourselves as individuals on personal income tax, but also for the business income tax and VAT. We need to do our best to remain compliant. And if it happens that we owe SARS, the key takeaway message that we have received today is let's not run away from SARS. Let's not do that. Let's rather approach SARS and find a way that we can settle the debt that we have. There is different mechanisms that have been presented today, which we can all make use of and ensure that we remain compliant and we pay off the debt of SARS in line with our cash flow availability, but having engaged SARS and having spoken to them. And I think another key takeaway message as well that has come through here, yes, we may appoint an accountant or a tax practitioner to help us with our tax requirements and with the accounting of our practices. But we remain liable for ensuring that all the calculations and the submissions are done on a monthly basis. So it's our responsibility to continue monitoring and ensuring that everything that gets done is done in a compliant manner, and then it receives all the specific requirements that should be done from the side of SARS. So we have to continuously check, speak to our accountant, ensure that they're doing it correctly. So we really hope that today's webinar has provided you with valuable information, and it has given you a deeper understanding of the challenges that are related with SARS debt and how you can resolve these issues. The insights that you've given us, Nobile, thank you very much, useful insights. And we encourage all our practitioners here to explore all these different options. And again, to come back through, if you have any questions or inquiries, you could then ask through the South African Medical Association, and you can then be able to be directed and get any assistance that you may need related to tonight's webinar or any other related issues that you may have. So in closing, it's really critical that we say we must understand all specific SARS legislation and requirements in as far as SARS tax debt is concerned. And the first step, as we have seen here, is how to manage it and resolve the debt in a timely manner. So let's continue to educate ourselves and let's stay informed of our tax regulations and requirements and if there's any changes. And let's remember, managing tax debt is a journey. So it's a process that we must continuously do, and it requires that we remain patient and that we remain resolute to ensure that we manage and remain compliant. So by taking all the proactive steps, and as we have discussed in this webinar, and seeking the right guidance from the right experts that can help us and guide us, we all can work towards resolving our tax debt. We have seen the requests from the guests that attended today for additional topics around SARS, around trust. We have also seen a number of questions in terms of the right entity that one could be registered. We have seen questions around the differences between the different tax types, VAT, income tax, pay as you earn. So those are all different tax types, and we have seen a number of questions around that. As the South African Medical Association, we are going to schedule a lot more webinars going forward that specifically touch on those issues so that you remain and stay informed. And at the end of the webinar, you do have the option as well for the survey to indicate any webinars or other related SARS-related issues that you really want us to touch on in our webinars. And definitely we'll be able to assist you going forward. So thank you very much. Thank you for attending tonight. Thank you, Nqabile, for arranging and for speaking to us tonight. Thank you to all the administration teams that have assisted us to tonight's webinar. And thank you again to all our summer leaders that have connected, including our summer chairperson who was in the webinar, for attending throughout. We really value your time, and have a good evening, colleagues.
Okay, thank you.